Hello friends, I'm on the beautiful beach at South Carolina. It just does never get old. Look at that view behind me. Isn't that incredible? The video today is going to be really good. I'm excited about it. So there's going to be three things that we're going to talk about. The first, if you like boring stocks that just pay dividends and grow over time, you're going to want to see this stock that I've come across. It's a stock that I came across the other day doing some research. I'm excited to share it with you. So if you like boring and you like high dividend CAGRs, then you're going to like this stock, I believe. The second thing I want to talk about today is I have something that I call the dividend selection matrix. And many of you have heard me talk about that I have two portfolios. One is a high growth portfolio, one is a high yield portfolio. So at the end of my due diligence process, which is an 8-part process that I go through, once I determine I'm going to buy into a stock and build a position in a stock, the next question for me is, what portfolio does it go in? Does it go into my high yield portfolio? Does it go into my high growth portfolio? And it goes in, or it may even go into both, right? It may go into both high yield and high growth. And how do I make that determination? So I want to share that matrix with you today, talk a little bit about the criteria that I use for the dividend stock selection for my portfolios. The third thing I want to talk about today is that my portfolio has just passed a milestone. And I'll share that with you in the process of sharing with you the trades that I have done in both portfolios, both the high yield and the high growth, over the last 6 weeks, starting from November 1st, ending today, which is December the 15th. So grab your favorite hot beverage and join me as we walk through these three things today on our video. Welcome to Dividend Growth Investing with Kevin Burgess. Dividend growth investing is not about chasing yield. It is a thoughtful investing strategy. Dividend growth investing protects me from making poor decisions by taking some of the emotion out of the investing process. The strategy is to invest in quality companies with consistent growing dividends with large moats. And it keeps me invested in the market. If you like this content, please like this video and subscribe to my channel. It means so much to me. Now let's get started. Now without further ado, let's take a look at this stock that I came across. It's called New Jersey Resources, ticker symbol NJR. As you can tell from this slide, they've been growing their earnings by 8.3% per year and growing their dividend by 7.3% per year. About 2/3 of their business is a regulated natural gas utility, and because of that, they have very few natural competitors. NJR is located in New Jersey, which is on the outskirts of New York City, and as the cost of living in New York City grows, this area will continue to grow in population. NJR has 5 business segments: New Jersey Natural Gas, Clean Energy Ventures, Storage and Transportation, Energy Services, and Home Services. And as you can see from this chart, New Jersey Natural Gas makes up about 2/3 of NJR, while the Clean Energy Ventures segment makes up about 1/4. They have some unique competitive advantages. For example, they have a difficult to replicate network of natural gas distribution and transmission assets. And they have rate-setting mechanisms and a regulatory environment that they play very well in. And all businesses have risks. NJR is no exception to this. They have risks in operations, regulation, as well as litigation. And in my opinion, they manage these risks well by focusing on employee and customer safety, as well as putting in safe, leak-resistant lines. Because they have performed so well in customer service as well as in operations, they have a supportive regulatory environment. And being a regulated utility, they have a need for capital because the way they make money is by investing in assets. And this need for capital may drive higher debt load as well as stock issuances in the future. Regarding their financials, they have a dividend safety score of 74. And you can see from this chart that they have grown their dividend for the last 26 years. The latest was a 9% growth. The 5-year CAGR is 7%, while the last 20 years average has grown by 6% per year. And earnings have grown up and to the right for the last several years. And their earnings payout ratio is very reasonable for a utility. Valuation is very important when we look at an investment because price is what you pay, but value is what you get. You can see from the Morningstar analysis that they have a fair value of $39 on this stock, and Seeking Alpha has a price target of $42.75. As you can see, I've moved indoors for the rest of this video. With NJR, they are a natural gas utility. It is, for my portfolio, something that I'm very interested in because they are boring, but they are growing in terms of their dividend. And so, it's something that's exciting for me. While I'm not an investment professional and don't recommend stocks, it is something that, I thought maybe you guys would be interested in taking a look at, doing your own due diligence on, and seeing if it fits into your portfolio process. So without further ado, let's get into this dividend stock selection matrix. And I've got it displaying on the screen now. You'll see that on the left-hand side of this chart is dividend growth. The bottom or the x-axis is dividend yield. Now, for those who may be new to dividend growth investing, dividend growth has to do with the dividends that are paid by the company, has nothing to do with the stock price growth. So the dividends are issued by the board of directors of the company, and as those dividends grow over time, that's what we're looking for on this y-axis of the matrix. On the bottom, or on the x-axis of the matrix, you see we have dividend yield. Dividend yield is the amount of those dividends that are paid by the company divided by their share price. So the dividend yield can change based on the share price. So if a company issues a $1 dividend and they have a $10 stock price, they have a yield of 10%. If the stock price jumps to $20 and they still have a $1 dividend, they will now have a 5% yield. And you'll notice that on this chart, growth increases as it moves up the chart, and yield increases as it moves to the right on the chart. So the red box inside the matrix is the area where there's both low growth and low yield. And I, in my portfolios, don't have an interest in either of those. So, but if I look then at the high growth, low yield area, those stocks are important for my high growth portfolio. The box on the right bottom that shows low growth and high yield, those are the stocks that I'm interested in for my high yield account. And then you'll notice that there is a yellow box in the top right that is high yield and high growth. Those I have in a yellow box because you want to take caution with those. Typically, there is a reason that a stock is both high growth and high yield. It typically means that there's something that has happened that has caused the price of the stock to go down. So therefore, the yield of the stock is higher because the stock price is lower, yet their historic yield, or I'm sorry, their historic growth is still showing as a high growth. So sometimes you can have a high growth, high yield stock that you really don't want to be in at the moment. So it's important to do your due diligence on those. That's why I put that box in yellow. And also from that box, I may pick stocks that could either go into my high growth portfolio or my high yield portfolio, or even both portfolios if I choose. And I thought it might be interesting for you to see the stocks that I own in both of my portfolios. And I'm displaying that right now in the same or similar chart. I've pulled in the logos from the companies that I own in my portfolios. You can see which ones fall into which box. I won't go through all of these. This was a helpful process for me though, because it identified for me that I have Kyndryl, which is a spinoff from IBM. It is neither high growth nor high yield, and it doesn't belong in either of my portfolios, yet I still have it in my high yield portfolio. And even though I'm down significantly in that stock, I may end up selling it. Now, just one other point is there are criteria that I use for being either high growth or high yield. So there's some percentages that I'm looking for. I'm more than happy to share those with you, but for the sake of this video, I'm just showing you what's in what category at this point. So one point to make is that there's some high yield stocks, and some of these would make sense, like Verizon and Philip Morris International. Then there's some high growth stocks, which I would consider Pepsi and Cummins, Apple, Kroger to all be in that category. Then there's some different, there's some ones that are both. And let's take AbbVie, for example. AbbVie is a high growth, high dividend company, mainly associated with their main drug, Humira, who's coming off of patent protection beginning in 2023. So because of that, I have placed that in both. It's both a high yield and a high growth. Yet I only include it thus far in my high yield portfolio. So hopefully that's been helpful. If you've got any questions on the matrix itself, or even the stocks that I have allocated into which box and why, more than happy to answer that. Just leave me a note in the notes below or the comments below, and I will be more than happy to address that. Or if it's something that might be helpful for a future video, I may include it in there as well. Now, the last part of this video is going to be an update on my portfolio. I'm going to share with you the trades that I've made in the last 6 weeks, as well as share with you a big milestone for my portfolio, and I'm excited about that. So here's my high yield portfolio and the update on it. As you can see, the portfolio balance is $162,000. But the most important thing is the milestone that we've hit this week. You can now see that we have $8,410 per year in dividends coming from this account, which makes us a $700 per month dividend income portfolio. It's a huge milestone, and I wanted to share it because I wanted to encourage you to keep going and don't give up, because this dividend portfolio is going to be very beneficial to me in the future, and I want yours to be good for you as well. So there's been quite a bit of activity in this portfolio for the last 6 weeks. You can see I've entered into 3 new positions. One of them is Kyndryl, which came from the IBM spinoff. I'm likely going to sell that before too long. But then there's Lockheed Martin, and Lockheed Martin actually dropped low enough that it fit the criteria for me to be in both my high growth as well as my high yield portfolio. So I added 10 shares of Lockheed Martin into my high yield portfolio. And then the stock that I talked about earlier in this video is New Jersey Resources. I've added 50 shares of that into my portfolio. You can see along the right hand side the increase in positions. I've got shares of Amgen that you'll also notice that I exited that stock, and I'll talk about that on the exit page. But you can see some of these stocks. These are all my core stocks in my portfolio. And so over the last 6 weeks, I've entered into transactions to increase the portfolio by that amount of shares at different times. But I just thought you might be interested in seeing it in this format. And you'll notice that the purchases for the last 6 weeks totaled up to $68,100. Regarding sales, you can see that I sold out of Amgen as well as Merck. I no longer hold those positions in this portfolio. They're not bad companies, they're not bad stocks. It's just that I had too many pharmaceuticals in my portfolio. I also have AbbVie, I have J&J. So I wanted to thin that herd a bit and got rid of Amgen and Merck. I also sold out of JM Smucker, mainly because I just didn't feel that they had the pricing power to create a large moat for them. And I didn't have that many shares to begin with, so I pulled out of them. Also wanted to show you that I did one contract of an option in this portfolio just to try to figure out how it worked. On the 2nd of November, I sold a contract for Hess Midstream, sold it for $100.32. I bought it back before it expired. I bought it back on 12/10. It would expire on 12/17. And I bought it back for $15.02. So overall, I had a net options gain of $85.30, which calculates into an annualized yield of over 30%. So I may end up doing more of these cash covered puts out of this portfolio moving forward. Now let's round out the video with an update on the high growth portfolio. As you can see, the balance is $534,000 with an annual income of $14,000. So during the 6-week period, we purchased about $147,000 worth of shares. I entered several new positions. One is Kyndryl from the spinoff. You'll notice that I actually sold it out of this portfolio. I also entered into Atmos Energy, Best Buy, EOG Resources, Snap-on, and Stanley Black & Decker. I'm a fan of all of these companies, and so I added shares in them. You can see the companies that I increased positions on: Allstate, Comcast, Cummins, General Dynamics, Kroger, and Stepan. And then I also sold about $27,000 worth of shares, mainly Pinnacle West Capital Corporation. And just to be clear, I am a huge fan of Pinnacle West. I had just entered into a very large position with them as they were going through their turmoil, and felt to right size my portfolio that I needed to reduce shares in Pinnacle West. And so with that, I still own quite a few shares of Pinnacle West in both portfolios, but just felt it was the right thing to do to balance my portfolio out, to get rid of some of those shares. So if you've made it this far in this video, I am so glad you're still with me. I do want to say thank you for joining me. And if you would, it would mean the world to me if you would hit the like button and subscribe and ring the bell, so you'll get future notices of future videos. So with that, I will bid you adieu and see you in the next video.